Hey, here we are. One last time together, okay? Lecture number 39 of 39. This is it, okay? Now, I don't want you to be embarrassed if you get a little emotional today. Okay? Maybe the tears come, okay? I know you're going to miss me. I'm always just a mouse click away, okay? I'm always online. You can always rewatch them, all right? But we have one last lecture. Is that correct? And I don't even know that we're going to go the full time. So we timed it perfectly. And I give myself credit for that. I'm just kidding. Okay. We will go over, I think I assigned about 5 quick studies from chapter 11. Is that right? So we will go over those today. I think those were pretty easy, were they not? And then we will talk about the final a little bit, okay? Then we'll have a group hug. We'll share some memories, okay? And then we'll call it a class. Hot chocolate. Hot chocolate. Of course, when the people at home watch this, it could be in the middle of summer. So in that case, strawberry margarita. Okay? All right. For those of you who are 21. Okay, let's take a look at quick study 11.4. That was the first one, was it not? Okay. All right, quick study 11.4. And this is in regards to short-term notes payable. On November the 7th, 2009, Stockman Company borrows $80,000 cash by signing a 90-day 8% note payable with a face value of $80,000. Okay? Compute the accrued interest payable on December 31 of 2009. Okay? And then they want us to prepare the journal entry to record that accrued interest at that same date. And then they want us to prepare the journal entry to record payment of the note at maturity. All right, we can do that. Now, did you count your days to see how much interest we needed to accrue as of December 31 of 2009? How many days did you get? 55? Okay. Anybody else get a different number? Okay. They actually came up with 54. But, Peter, if you came up with 55, I would not count that off, okay? I'm not that worried about a day. It would not make much difference at all. Okay, can you see that? So there's the answer to actually the first 2 things that they ask. The computation of the interest payable. Once again, you take the annual interest rate times the principal amount of $80,000 times 54 divided by 360. Because between November 7th and December 31, we have accrued $54 days worth of interest that we have to pay. Now, we don't have to pay it on December 31st, but we need to properly show this liability on the books, and we need to get this interest expense booked in that proper period. Now, it's not that much for this certain company, but for a company that has large amounts of debt, this could be a large number. Okay? This could be a big number that they need to accrue on their financial statements. Okay? So that is how we came up with that. You probably came up with a little different number there. Okay? And again, we divide by 360 just because it makes the math a little easier. If you divide it by 365, you'd come up with pretty close to the same answer. And if on a test or something, if your exact answer is not there, just choose the one that's closest to what you came up with, okay? All right? Okay, let's take a look at the last thing they ask us on this one, though, which is prepare the journal entry to record payment of the note at maturity. Now, the way that I always do this, I'll put the entry up there and then we can talk through it, is I always compute how much cash we have to pay out in total at maturity date. Well, we know we got to pay the $80,000 principal off, right? Well, what's the total amount of interest that we have to pay? Well, I would take 8% times 80,000 times 90 over 360, and that would give me 1,600, right? So the total interest is 1,600 plus the principal of $80,000 means a total cash outlay of $81,600. Okay? Then I ask myself, how much of that $1,600 has not yet been expensed but needs to be? Well, in this case, it's $640. I reduce the interest payable liability that I established on December 31st. I take the principal off the books, and then it all should balance real nicely. Okay? And we've kind of done this before, haven't we? Did this in chapter 3 a little bit. We looked at something similar in the notes receivable chapter. Lots of memories, right?
Yeah.
Lots of memories. Lots of memories. Okay. Questions on Quick Study 11.4? Okay, let's go to the next one, which was Quick Study 11.7. Is that correct? This is actually so simple. It's like, is this what they want us to do? Yeah, it is. Eric Company offers an annual bonus to employees if the company meets certain net income goals. Prepare the journal entry to record a $15,000 bonus owed to its workers to be shared equally at calendar year end. Okay? All they really want us to do there is to get this liability on the books. This is a current liability. Now, you might have used slightly different account titles, but make sure you're not crediting accounts payable, okay? Because this is not an accounts payable. Accounts payable is a separate account where we keep track of stuff that we owe, amounts that we owe vendors. All right. So this is the little liability that we need to kind of accrue, again, to show the readers of our financial statements that we have that liability. All right? Questions on that one? Okay, let's go to 11.8, quick study. All right. Let me get a pen out here. On September 11th of 2008, Lawn Outfitters sells a mower for $750 with a 1-year warranty that covers parts. Warranty expense is estimated at 3% of sales. Okay? Now, they don't ask us to do this, but let's go ahead and do it anyway. What would be the entry that we would make at September 11th of 2008? Okay? Let's go ahead and do that. All right? Okay, what is 3% of 750? I can't do that. It's too early in the morning. $22.50? Okay. All right. So, it doesn't ask us to do this again, but I'm doing it anyway. Okay. What we would debit here is something like estimated warranty expense. Estimated warranty expense. And this would be estimated warranty liability. Okay? Estimated warranty liability. Okay? Doesn't ask us to do that, but I wanted to go ahead and do that to show what it looks like when we set up that liability. We're going to make one of these entries every time we make a sale. Okay? Now, you can cut away from the Elmo for a second. Does that mean on every item we sell, every 750 mower we sell, we're going to get exactly $22.50 worth of warranty that we have to do on that? No. There's going to be a lot of them that we never have to do any work on, right? And there'll be some that we certainly have to do more than $22.50 work on. Correct? 3% is the average that we use. But again, by acting in this way, we are booking the expense in the same period as the revenue is booked. We're following the matching principle. Okay? All right. Now let's see what they actually ask us to do. On July 24 of 2009, the mower is brought in for repairs, covered under the warranty, requiring $55 in materials taken from the repair parts inventory. Okay? Prepare that entry. Now, the people who sell the mower, or the company that sells the mower, is the same company that repairs the mower. Okay? So we have a parts inventory. So when they come in and they want to have that mower fixed under warranty, we reduce that liability that we previously established. And in this case, we decrease the parts inventory, the repair parts inventory from which we took those parts to fix it. Okay? All right? Does that make sense? All right. Any questions on that? Any questions on that? If you take, if any of you go into accounting and take more accounting classes, not accounting 2, but maybe beyond that, like if you ever take an intermediate accounting, you'll talk a lot more about different types of liabilities that could be put on your books. Okay? So we're just kind of scratching the surface here a little bit. Okay? All right. Questions? All right. Okay, let's take a look at the next one, which is Quick Study 11-9. Is that correct? Okay, let's take a look at that. The following legal claims exist for Van Beek Company. Identify the accounting treatment for each claim as either a liability that is recorded, in other words, we would book a JE to record that liability, or we don't book a journal entry, we just disclose it in the notes to the financial statements. Okay? Number 1, Van Beek, the defendant, estimates that the pending lawsuit could result in damages of $250,000. It is reasonably possible that the plaintiff will win the case. What do we do? Use your voices. What do we do? It's estimable, but it's only reasonably possible. So looking at that one chart, go over to, is it probable, remote, or reasonably possible? And then is it can be estimated or cannot be estimated? This is a situation where it's reasonably possible. So what does it say to do in that situation? Notes. Disclose it in the notes. We do not book a journal entry, we just disclose it in the notes. Okay? So that's the little chart that this quick study is referring to. What about the second case? Van Beek faces a probable loss on a pending lawsuit. The amount is not reasonably estimable. Estimable? Is that right? Notes. It's probable, but you can't estimate it. So doesn't your chart say in that sort of situation, notes? Okay. Third case. Van Beek estimates damages. Sounds like Van Beek's really getting sued a lot, isn't it? I think they're in some trouble. Okay. Van Beek estimates damages in the case at $1.5 million with a high probability of losing the case. What do we do here? We book that journal entry. High probability, and it can be estimated. So you got to get that liability on the books. Let me ask you this. If you were an external party to Van Beek and you were thinking about investing in the company, or if you were a bank thinking about extending credit to this company, would this be something you'd want to know about? Yeah, I think so. Yeah, and Van Beek, maybe you wished it weren't that way, but okay. All right. Any questions on Quick Study 11-9? Okay. Let's go to Quick Study 11-10. Compute the times interest earned for Zelma Company, which reports income before interest expense and income taxes of $1,044,000 and interest expense of $145,000. interpret its times interest earned ratio, and assume that the competitors average a times interest earned of 4.0. Okay? All right. Okay, the answer to this is up there. First of all, look at the computation of TIE. And as you can see, this is a ratio that, all things being equal, you'd rather have it be high. 7.2 is pretty healthy. Competitors are only about 4.0. So this would suggest that we do have sufficient income to cover that interest liability. Okay? So just like in your own personal lives, you need to evaluate if you have enough income to pay your debts, perhaps interest that you owe. Businesses have to do the same. Okay? Businesses have to do the same. If you saw this TIE ratio for a certain company over a period of time going down, that might be a sign that things are not as good as they should be. Okay? All right? Okay, questions on that? That's it, isn't it? Is that it? Okay. Okay, I do want to start chapter 12 just a little bit today. I want to see how far we can get into it. I'm just kidding. All right, I'm sorry. I always joke around. I'm always a little punchy on the last day of class. No, we are done. Okay? Now let's talk a little bit about the final. Okay? Let's talk a little bit about the final. Now, let me put this up on the screen for you folks at home. I'll move it up here in a second. This is probably in your blue book, but I'll put it up on the screen as well. Let's talk about the final. The final is comprehensive. Of course, the final is not one of the ones that can be dropped. Okay? I think you need more. I think I might have ran out. I'll give you the one that's, whoever's short, I'll give you the one here on the screen here in a second, okay? But I want you to, people always kind of freak out about this final. And it's like, oh my gosh, it's going to be over 10 chapters because we don't cover 7. It's not going to be as bad as you think. This subject builds on itself a lot. And as you go back and look at chapters 1, 2, 3, and 4 especially, you're going to be surprised how much that stuff comes to you, hopefully. And especially if you learned it the first time. If you never learned it the first time, well, then there could be some trouble. Okay? But I kind of, in this little review, gave you what I consider to be the high points of the chapters. Okay? And so you can take a look at that. A good rule of thumb, the best way to study for my test is always to see if you can do the homework. Okay? If I asked, 4 or 5 homework questions over a particular concept, chances are that's something that's going to be on the final. Okay? But I'm not trying to find some little footnote, and I'm not really, contrary to public opinion, I'm really not trying to trick anybody. Okay? Now, I will tell you, I haven't written this test yet, but this test will be a higher percentage of multiple choice. Okay? Now, some people always freak out. Now, let's talk about that for a second. You can come off this screen here. When I say that something is going to be multiple choice, that doesn't mean it's just definitions and concepts. Okay? You can ask just about any sort of question in a problem in a multiple choice format. For instance, I could tell you, ABC Company purchased an asset on January 1, 2009. The asset cost $55,000. Salvage value was $5,000. The estimated life was 10 years. If the company uses a straight line, the amount of depreciation taken in the first year would be A, $5,000, A, $10,000, or B, 10,000, C, whatever. And I could have each, different numbers for each different option, okay? So I can test numerically using multiple choice, right? Now, I always think the best thing to do in that sort of instance, if I'm asking you what the depreciation is, just ignore the multiple choice options. Just compute it out and then look to see if your answer's there, okay? And hope that I don't do the none of the above thing. Don't you hate the none of the above? Hated the none above, okay? There are times that I can even test using multiple choice a journal entry sort of a situation. I could say, I could give you some information about estimating bad debt expense. And I could say the journal entry to estimate bad debt expense under these conditions would contain A, debit to allowance for doubtful accounts for $11,000, B, a credit to allowance for doubtful accounts for $11,000, C, a credit to bad debt, da-da-da-da. In that sort of case, the journal entry thing, certainly ignore those. Just make your journal entry as if it were a problem, and then look for the multiple choice option that corresponds with the JE you just made. Does that make sense? Whenever you try to do the shortcut, whenever I see students try to do the shortcut, it's like, I don't want to write out the journal entry, I'll just look for it. Oh, there it is. They end up making a silly little mistake. Okay? Silly little mistake. So as much as possible, and this goes for not just this class, but all your classes, on multiple choice, try to come up with the answer when they're numerical. Or even sometimes you can do them when they're not numerical. Come up with the answer without looking at the options and then see if there's an option that corresponds with what you came up with. Does that make sense? Okay. I do like to have, I know when I was a student, I would rather have more questions that are worth less points each. Okay? So that if you forget how to do a bank rec or whatever, it's not going to kill you 6 points or whatever on the final. Okay? But you'll have plenty of time. I think you have a couple hours to take the final, don't you? At least.
Yes.
Nobody's ever needed the whole 2 hours, I don't think. Okay?
Is our final the same time as from the class?
Yes.
Okay.
Now, for you folks at home, plug your ears right now because it's different. But our final in this class is, when is it?
Wednesday.
It's Wednesday. Ignore that at home, okay? For you folks at home, I will email you. You have a period of time, about 5 or 6 days, for which you can take the final, okay? And don't put it off till the last minute, because something will come up and you'll not be able to take it, okay? There's not a lot of wiggle room on the final because I got to get grades in, okay? So, did you have a question, Erica?
Calculators? Are you going to have them?
Yes.
Okay.
Yes. You can use your own calculator if it does not have a program key. So like this would be one you could use. If it has a program key, then I will bring one for you. For you folks that take it in the test center or take it otherwise, same situation. And the test center does have calculators. Okay, those little red ones. All right. Couple more things on here though. I'm not going to have any of the ratios on the test, okay? No ratios on the test. So you do not need to memorize those, okay? You should be saying, thank you, Dave, right now, okay? Because I know that's kind of hard. I don't even have all those ratios memorized, so I'm not going to expect you to do it. So there's no end of this chapter financial ratios on the test. Know your accounting principles. Remember those? Cost principles, revenue recognition, matching, going concern. Remember those? Certainly at this point in the class, you should know your account balances, if it's a normal debit or normal credit balance account, which financial statement they belong on. Okay. What other questions do you have for the final? Any other questions?
How many questions will there be?
I don't know. I haven't written it yet. There'll be more than normal. Okay. I guess it'd take about an hour and 20 minutes to do. Okay?
So it's going to be about 2 hours.
I don't know. Depends on how quick a test take you are. Don't rush out of there, though. Go through and check your answers. Make sure you didn't. Another thing I will tell you that's very important. Glad you reminded me. The final exam, you never actually get the final exam back, do you? make sure, since there's more multiple choice than normal, make sure you take extra care to make sure that you transposed your answers from your test to the Scantron accurately. Because if you got off one, that would really be sad, wouldn't it? And you'd never be able to catch that correctly. Is that right? So make sure you leave some time to go through very carefully to make sure you transposed your answer to the green Scantron correctly. If you have to erase and if you booger up a green Scantron, well then ask me for another one or ask the folks in the test center for another one. But because it can read it wrong, okay? So if in doubt, I know a lot of students, they don't even do anything with the green Scantron while they're taking the test. They just write all over the test, they get everything, and so they're like, okay, I'm ready, and then they do it all at once. So if they change their mind, they don't have to keep erasing. Okay? Please, folks at home, please put your names on the test and the green Scantron. You guys as well. I'm always amazed by how many students don't put their names on their tests or their Scantrons. Maybe they don't want to claim them. Okay? But I figure out who they are eventually. All right? Okay, other questions? Okay, for you folks here who are live, I want you to stay a couple minutes after we turn the cameras off, okay? But to close everything up, I think you guys have learned a lot. If you think back to 3 or 4 months ago, I think you have learned a lot about accounting. How many of you are going to take accounting 2? Anybody? Okay, a lot of people in accounting 1 go on to take accounting 2. I appreciate you folks here that allowed yourself to be filmed or videotaped every day. That is something that you can watch and cringe at, okay, like I have to do, all right? For you folks at home, I hope things went well. If I can ever help any of you folks at home, or any of you folks, let me know. If any of you folks who are take this course on online or TV or whatever, and if you come to my Accounting 2 class, remember, I don't know your face, okay? So I know you know mine, okay? Because sometimes people are like, hey, it's Jimmy. Remember, I took you online. It's like, Jimmy, I never saw you. I know you saw me, but I never saw you, all right? So, but if I can ever be of help to you guys, I plan on being at JCCC a long time. And so let's call it good. For anything else for you folks at home, you can always email me. I might be emailing you as well. So we shall see you later. Bye-bye. Okay.